morning. Today is Tuesday, January 8th, 2012. Here we give a wrap-up of the commodities complex as it closed yesterday, January 7th, 2012. Markets remain range-bound, bullions a bit weak, crude positive, and base metals taking strong supports and sustaining at current levels. We first talk about bullions. Gold is now trading at around the 1646 to 49 mark. It hit a low yesterday of 1642 and a high of 1665, unable to break up and close above the resistance of $1660. Strong support is now seen at $1635. A break and close below 1635 could test $1610, $1600 and $1580. Only if it sustains and closes above 1660 to 65 could we see the next level of 1680. On the MCX, it's trading below the 31,000 mark. Strong support is now seen at 30,800. Sell-on rises is recommended with a stop loss about 31,050 for a target of 30,800 to 750. Silver is trading in a narrow range at around $30 mark, unable to reach and close above the resistance of 30.40, not below the strong support of $29.50. Hit a low of 29.8 and a high of 30.4. Unless it sustains and closes above 30.5, you can't see the next level of positive trades. On the MCX exchange, hit the 58,000 mark briefly late last evening and closed below that yesterday. Sell-on rises is recommended at around 58,300 with a stop loss about 58,500 to 600. So again test the supports of 57,800 and 57,500. Major bearishness will be seen on a close below 29.5 to target 28 and 26 if further weakness persists. Critical to note in bullions is the continued weakness over the past few days in the INR above the 55 rupee mark, which is holding up bullions. Hence, any weakness in dollar terms in bullions over the past few days is offset by weakness in the INR, and that is compensated to a great effect. Of all the commodities, crude seems to be the strongest, trading around the $93 mark, taking strong positional support at $90 and looks to test 94 and 95 in the days to come. It all depends on the inventories during the course of this week. Last week's inventory showed a major downfall of 11 million barrels, and hence the prices have been held high. On the MCX mark, strong support is seen at 5100. If it sustains above 5150, could test 5200, 5250 and 5300 in the days to come. Hit a low yesterday of 1507, and hence stop loss can be maintained below 5100, although the correct technical stop loss would be taken as 5070. Copper seems range bound. Strong support was taken yesterday at 448 mark and resistance at 452. On a positional basis, support seems to be at 447 and 445.80 and resistance between 453 and 454. Further weakness will be seen only on a close below 447 or still further below 445.50 mark till 443. On the other hand, a close above 454 could signal higher levels up to 458 and 463. One can accumulate copper around the 448 to 450 mark with stop loss below 445 for targets of 454, 54 and 56. Of all the base metals, nickel remains weak, hit a low of 951 yesterday. Strong support will be seen on a positional basis at 940 and resistance at 972. Wait for fresh entry in nickel as trades seem to be unclear. On a positional basis, only on a close above 988 could we see the next positive rally up to 1040. Lead and zinc traded sideways with mild weakness yesterday. Strong support for lead is seen at 125.50 and resistance at 129.50. Only a close above 130 would signal the next positive uptrend. Zinc remained weak yesterday, tested lows of 110.65 but closed above the 111.20 mark. One can accumulate buys with stop loss below 110.20 for targets of 112 after 130. Aluminium remains mild weak, seems to be the dark horse in the race among all the base metals. Accumulate on any declines. We'll update in our website and in our commentaries on the buy levels as and when they come. Natural gas trades above the 180 mark. Last week's inventory in natural gas saw a sharp decline in inventories and hence prices have been held higher, now trading above 185. Resistance at 188 and 191 on a closing basis, and support is below 180. For further updates and commentaries, please visit our website at www.share